Sorry for the background noise. I got my mother-in-law here, talking over the phone, and she's been 100%, 100% synchronized. So let's go and see here. Let's go here. So everybody, welcome to the webinar, Rinse and Repeat live webinar. In this webinar, we're going to be talking about execution. I got a team player here that they're just one talking, the other one screaming. But okay, we're going to talk about execution, simulation, and psychology. The simulation is the simulation that we did last week, but we're going to be doing it. Last week we were doing it on formal. We were doing the simulation on formal. Now we're going to be doing the simulation on these criteria, execution. So, what is good entry and bad entry? Okay, that's our theme for the day. We're going to be talking about these topics, and the topics are going to be referred to good entry versus bad entry, execution in the market, effect on psychology, and you can ask question. If you have any charts, just send it in, and I'll just look at it once I'm finished. So let's get into this. What is this that's behind here? Uh, what is this that's behind here? Okay, this is my. Okay, so let's test this out. Okay, so this is a journal. I'm not gonna be talking about the journal at the moment. Why it says 5 trades? Let's see. Oh, okay, I understand now. I'm not gonna be talking about the journal at the moment, so we close this journal and nothing. Let's get our dates. Let's get our dates. Our dates for. Let's get our dates. So random dates. So let's see what dates we have here available. We have 25, anything between 25. Okay, let's look for anything between 25, 2025. Let's say 2025. Okay, 2025. Okay, the days that we're gonna be looking for is just Sundays. Okay, because those are the days we're gonna start trading on Sundays. I want dates like this. Yeah, it looks good like this. So get dates. So we got 5 dates here. 1, 2, 3, 4, 5. Okay. We don't know which one we're gonna pick. We never. So I'll just take this one. 0720. So July 20th until July 20th until July 27th. Okay. So now we're on the New York session. Fixed it. Let's leave that in 10. Let's put a 150 here. 30-minute. I'm gonna put the 15-minute, but I'm not gonna trade the 15. No, I'm just gonna leave it there just so that we can see how the market moves on those time frame. Okay. So we put this in black. We put this in white, and we put this in none. put this in the X, and okay, so it is how it is. Okay, so now here we have our daily time frame. Here we have our daily time frame. This is our daily time frame on the dates that we picked. So let me just close this. We won't be needing this anymore. And let's talk a little bit about this, okay? Let's talk a little bit about this. Okay. So you have two traders. Trader A is someone who can lose $10,000, right? Trader B. Let me put this a little bit more smaller, you know, so that it doesn't like. Trader A. Okay. Trader A has $10,000 to lose, right? This is trader A. Trader B has $2,000 to lose. Let's say he has $2,000 to lose. But as trader B only has $2,000 to lose, he needs perfect execution. Okay? Perfect execution. A, as he has $10,000 to lose, he can have dummy trades. Dummy trades. So let me just put in a chart here, a black chart here, just so that we can, you know, understand. So if we have like an uptrend, right? We have an uptrend. We have an uptrend coming up. We have an uptrend coming up. And we start seeing a retracement here. Here we start seeing a retracement, retracement, right? Here we get back like something to push back up, something like this, something, you know. Then we have a big drop here. Then we have a big drop here, a big drop. Okay, that's our big drop. I'm not gonna be filling out the wick because it's just gonna waste time. We have to make sure that our trades are executed at point. Like, finish this as fast as possible. Let's try to make this video at least 1 hour, so that we can move forward for next week. So we haven't these lines here. Sorry. Okay, so we have a support here, and we have a resistance, and we have a support here. Let me just draw this. Just draw this here, so that just draw it here, right there. Okay, let me draw a green one, just so that it knows. Okay, so guys, listen. Trader A. This is too. Trader A is interested in buys because the daily time frame, as we can see here, it's up. Let's say this is the 30 minute. Let's say this is the 30 minute. Trader A is looking at this, right? And he says, okay, we are going to be pushing up, right? We are going to be pushing up, and we're going to be passing all this and keep pushing up. So Trader A, start looking at the market at this point and says, okay, you know what, I want an entry. I want an entry here because we have rejection this side here. Trader A take his entry. Let me just put this also blue so that we know that we're talking about trader B. And oh no, sorry, let me put this blue so that we know we're talking about trader A. So remember, DT stands for dummy trades, okay? So no confirmation for to retest these highs, no confirmation at all, and trader A wants to go in. Sorry about that. Trader A wants to go in to take advantage of a discount price to retest these highs, right? While trader B is still waiting on this setup. Okay, so let's say trader A goes in, I don't know, 1 GC. No, it's an analysis. Let's go hard. Let's go 3 GC. Not even 3 GC. He only has $10,000 to risk. 3 GC is okay. Okay, 3 GC. Let's go on with 3 GC. Once this candle start doing this, start pushing down, you know, because sometimes we have to make a bottom wick, this and that, you know. Start pushing down. Let's say this is the 15 minute, okay? This candle, I'm gonna write down this candle. This candle is the 15 minute, okay? So this is gonna be looking like this afterwards. So I'm gonna be drawing it perfect. So I need this here, need this here. So I'm gonna draw this candle perfect. Okay, so okay. So this candle is looking like this, right? This person here, this trader A, is in all this drawdown here. All this drawdown is his. All this drawdown. Let's say this is a 100 pip drawdown. You know, gold has been moving crazy lately. 100 pip is a $3,000 drawdown with three contracts. This move here has this trader thinking that, oh, what are we gonna do? I'm about to close. I'm nervous. This and that. He's so nervous. He doesn't know how to think about this trade. You know, he's trying to exit the trade. He's trying to go in the trade against his will. He's trying to do like anything to keep inside of this trade to try and get money out of it. Okay, this is this guy. Once this guy here, this trader B, this is us. This is us. We only have $2,000 to risk. So we going in. Let's say we going in with entry for trader B. Let's put it brown. Entry for trader B is gonna be the break of this high. Okay, the break of that high is gonna be the entry. So once this candle here does this, break this high here, trader B is activated. Okay, so what's the difference between this trade and this trade? The difference between these two trades is that this candle here showed us that this momentum pushing down is possible to keep pushing down, and it did. the join that I did, it did push down. I'm just trying to give you an idea for when we start doing the simulation, because we're going to be looking for this type of setup, and we're going to try to enter on this scenario and on this scenario, so that we can understand what scenario is better. You know, trader A still has an opportunity to get at to not break this high and just push down, while trader B made his bottom wick. I'm not going to draw the bottom wick now because it's going to take time. So make that bottom wick and pushed up, and potentially it's going to do the same thing it did here on the 30-minute. It's going to do the same thing here on the 15-minute. So if you look at it, this one candle on the 30-minute is this 2 15-minute candle. Okay, this 30-minute candle is this 2 15-minute candle. So these 2 30-minute candle, it's one candle of this in the 1 hour. So let me draw it for you so you can understand. So let me draw it for you. Okay, give me a second. Let me just put that a little bit smaller so that it can blend in like a candle here. Okay, so just this candle here, right? We got a open right here. This is an open. This is the open. This is the close. This is, oh, sorry. We got an open right down here, an open. This is the close. This is the close. This could be the wick, like the wick it's leaving, and this could be the other wick it's left underneath. These two wicks. I didn't draw it, but let me draw it just to not confuse people. So these two candles, if they come together, it's gonna look like this. These two candles, if it comes together, it's gonna look like this. So what are the chances for this 15-minute to mimic the move of the 30-minute? It's high chance probability, but because we had this candle here, we didn't take the trade. So learning how to do this type of execution is the best thing. To wait on your setup, to wait on your execution, so that you can have a perfect execution. Because if you don't have a perfect execution, the trade that you're in is probably gonna end up being a loss, or you're gonna end up being in drawdown that you don't really need to be in drawdown. So sometimes taking these type of trades with a lot of drawdown stress you out mentally, and then you can't think for your next trade, whoa. Then a great setup comes in and you say, whoa, this is a great setup, let me take it, and you just ended up losing it. So let me see if I can find a trade real quick in this area here, so that, just give me a second, so that if I can find it, so I can explain it immediately. Okay, let me just open this. Okay, for example, this trade here. This trade here. Let me put this. Remember what I said? We had a candle that pushed down, but I wanted it to be this one, but it didn't continue. So I'm looking for a candle that does continue. Just give me a second. Okay, for example, this here, look. Once this candle closes, trader A goes in to buys. I'm doing it's not necessarily a setup. I'm just making sure that it's something that we're seeing on daily chart basis. This A plus, not A plus, sorry. This A trader trader A take its buy here. What happens with this A trader? He has all this in drawdown. All this he has in drawdown. But once we made support on the 50-minute, because this has support around this area on the 50-minute, trader B start coming in. While trader B start coming in and enter the break of this high, where's the drawdown for trader B? Trader B is risking $400, right? $400. Trader B is risking. Trader A is risking 10,000. Look all this stress that he has to go through. Look all this stress. And trader B don't have any stress. He just whoop, goes up and gets his money and get paid and come back the next day. Come back the next day. So why would you stay in a trade or try to catch a trade that doesn't have your confirmation, that doesn't have a perfect execution? So being too late in the market is bad, and being too early in the market is bad also. So you have to find the sweet point, like the for example, here we had like a support form to push up, but this candle here just took out all the buyers. Then these candles just gave all the profit to all the buyers who waited for this area to be broken, to be formed, and support to be formed here, to push all the way up here. So what can we see here? If you know where to wait, where to take advantage of, and what should be your entry point, that should be the point where you enter. Not just because the candle closed, not just because the candle showed you a bigger candle, not just because you have FOMO. You see in these big candles, you want to participate. For example, you take a buy up here. Would you like to be in this trade, in this big candle to the downside? No. What about here? If you take a buy here, would you like to be in all this drawdown in the buy side? No. So learn to pick your trades to get better entries. If you don't do it, you're gonna lose money. You're gonna lose a lot of money. A lot of money you're gonna lose. We're gonna talk about now execution. Okay, we're gonna talk about now execution. So let's just open this software and start looking for execution. Okay, I'm not gonna be straight in my strategy here. I'm just gonna be looking for opportunity that I can see that trader A and trader B can like be in a fight in who's gonna win what and who's gonna lose what, So just give me a second. Let me just mark out my lines here so that we have better lines. Okay, so let me put this small. So you see how this looks choppy? You see how choppy this looks? Sometimes people don't understand that when something looks choppy, it's best not to enter. It's best to stay away. Because this choppiness is really tight, bro. It's tight. Look at this. Look. I don't even know where to put the line. This choppiness is just so ugly. Look at this. Look at this choppiness, bro. Look. My God. So we open up the session. We remember we taking like a let's go in a 4 hour. As it's choppy, let's go in a 4 hour. Okay, so now we're in the 4 hour range. So we can put our line here. We can put another line here just to make it like understandable. And this line here we can place it here. Okay, so the bias is bullish. Top target concept could come in handy. So if we come up here, we could come into a tap target concept. Okay, so let's just, well, I'm very tired. Okay, we're gonna be talking about execution. So this is not just a simulation just for us to be simulating. No, this is about execution. Okay. Okay. So we're reaching to the point where we should be start getting preparing to get in a trade. Okay. Okay. Let me see. How do I? Okay, I put it like that. Okay, this is the way. So we put another line here. We put another line here. Okay. So trader A, let's say trader A goes in with a risk. Goes in with a risk to risk 1,000, right? $1,000. He goes in with a risk to risk $1,000. Give me a second. Okay, here. Yeah, I gotta change this. Okay, he goes in with a risk to risk $1,000, right? Let's say his stop loss is up here. No, he's risking 1%. Can I put 10 here? Is it not possible? Oh, yeah, I got it. So, trader A took this and to risking $1,000. That's what he's risking. He's risking $1,000, right? Up here, while trader B is waiting for his opportunity. Yeah. Okay. No, I think trader A is gonna take it home today. We think trader A is gonna take it home today. Okay, so trader B he's not in a trade yet, but trader A took advantage, and now trader A is about to get like his money. Okay, it happens to the best of us. To the best of us, it happens. You know what? Let me rewind it. Let me rewind it because I'm trying to find like the perfect execution. Okay, so the perfect execution, let's put it for buys, because as now we know that buys is likely to make trader A to become in drawdown, because that's the concept I want to be talking about now. Let me check who's online with us today. Oh, Kelvin. How you doing, Kelvin? Doing great? If you have any questions, any shots you want to send in, just send it in, okay? I'm here to help you read it and also to explain any doubts you have.
Okay.
Okay, now. So, okay, now as we see in here, let me go down to the 15 minute. Look all this drawdown that this guy's in. Look how much drawdown. This A guy, this trader A, look how much drawdown he's in. Okay, look how much drawdown. This guy is in so much drawdown that he's sweating. He just wants the markets to go a little bit in his favor for him to close. Okay, so now we stop. Wait a minute. Now we make sure that what is it? Okay. So B, Trader B hasn't gotten the trade yet. Trader B hasn't gotten the trade yet. Is Trader B thinking of getting in the trade? Yes. When is he thinking of getting in the trade? Now. Now Trader B is thinking of getting in the trade. But this trade of Trader B, he's gonna be risking a 3%. He's not gonna be risking how you call, and his stop loss is gonna be tighter. His stop loss is gonna be tighter, and he's not gonna be risking 10,000, because remember we said that he only has 400 to lose. Okay, he has $2,000 to lose, and the other trader has 10,000. So the other trader is gonna lose 1,000 per trade, and this guy's gonna lose 400 per trade because you only have 2,000 to lose. Okay, so now look. Let me open up a panel. Look the difference. Look at the difference. Look at the difference. Trader A desperately entering to getting a $400 loss, while Trader B is just $6 loss. And Trader B, he has even more money invested. Trader B has even more money invested, and $6 drawdown. So let's push these buttons and see. Remember, this one is Trader B, number 2 is Trader B, and number 1 is Trader A. Okay. Okay. Look at this. Look at this. Trader B in this point says, look, you know what? I'm gonna close partials. And then I'm gonna go break even. Okay, just give me a second. Give me a second, guys, because I'm not too good using these two tools together. Okay, break even. So Trader B already has money, already made $150 in the same trade, the same setup, the same mindset that Trader A took. But Trader A was too desperate to waiting for his setup, to waiting for a perfect entry, while Trader B waited for his entry and already got paid $150 and has a runner to get something else. So let's, oh my god, I just need it. And having a runner to see if he gets something else. Okay, to see. It's not guaranteed that he's gonna get something else, but at least he's not gonna be in a trade anymore. He can go and rest for the rest of the day. Okay, look at there. Look at there. Look at that trade. Look at that trade. Trader B has made $200. Okay, Trader B has made $200. Trader B said, okay, you know what? I'm done for the day. I made 200. Now let me just go walk the dog, go outside, enjoy, request a payout, do whatever he needs to do to be happy, you know. Trader B is no more in the game. Trader B closes trade and he's out, while Trader A is still in the trade and still wanted to catch a trade and still wanted to make profit off a buy. That's way too risky. So I'm gonna explain why the buy is risky, and I'm gonna explain why it's too risky for my, particular setup, so for my way of trading from the data I've gathered. But I'll explain that in a bit. Let me finish, giving the So Trader B finished trade. Trader B is done. Trader B is happy. Trader B, let's say Trader B is very that's not a happy face. Trader B is happy. and he probably is gonna come back tomorrow and do the same thing. You know, he probably is gonna come back tomorrow, smash the market. How much drawdown was Trader B in? Zero. Zero drawdown Trader B was in. So this is what I want you guys to understand. Trader B waited for his setup, got his money here, and got more money here. He's out the trade. He made $220 and he finished. No more trade for Trader B. No more trade. Okay? While Trader A entered here, and Trader A has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles. You know how much stress that guy was in right now? You know how much stress that was? Then because he got a break even, he says, okay, now I'm going to close here. I'm going to close here. I'm going to close here because I got my account back in break even. So this is formal, right? This is formal. Fear of missing out. But this is a formal that's fear of losing the account. Bro, you already were in $700 drawdown. Why not bring your drawdown much closer? Close a percentage, like half, and let it run. See what happens. Because you already were losing 700 in that trade. See if you can take out something more. But as this is just a simulation that I'm explaining some things to you guys, I'm going to let it run, you know? I'm going to let it run. I'm going to let it run so that we can talk about it. Talk about the stress and the emotion and stuff. Okay. This is 250. The guy said, okay, I'm going to make this 250. I'm going to make this 250. And he closed that trade. He closed that trade. Now, guys, I want you guys to look at these trades. Look at them. And tell me what's the difference, okay? This guy here has all this drawdown. Look at it, all this drawdown here. While this guy here who entered here had zero drawdown, no drawdown at all. Okay, no drawdown. He entered here, took advantage of that trade there, pushed up, and he exit. Okay, probably could have entered down here also, but that's another theory, that's another strategy, that's something that I'm not gonna go into. Okay, I'm gonna go into only this execution. So, who you think had a happy day? Who you think? Okay, this guy had a happy day. Okay, that's okay. He's happy. He breathed. He starts seeing like hope. But the stress. Look. 1 hour, 2 hours, 3 hours of stress. 3 hours of stress. This is not what trading should look like. If you're gonna be stressful in the trading, just leave it. Okay, leave it. Because this is not how trading should be looked. If you're gonna be in these drawdowns, why not take the trade down here? Why not take it down here? Why not take it down here? Okay, let's forget about taking it down here, because probably many people think that, oh no, you have the charts open in another computer or this or that, blah blah blah, whatsoever. Okay, why not take the trade here in this line here? Why not take it here? You know what? Why not take the trade here in this candle? Forget this line. Why not take it here in this candle where it's formed the support to push up, and not up here where it has a support, a resistance here, and you know it can reject this area because it's already rejected here, this area. Okay, so this is nothing. Why this is nothing? Because look at this candle. This candle just ran through it. You know, these candles here are not reacting to this. If I draw a line here, you can only see that this is reacting to it. Okay, if I draw a line here, you can see that there's not a lot of thing reacting to this support. So the support that are being reacted to is the one that we need to be for the lookout. For example, this one here. Look, you see this one? Look, it reacted here, it reacted here, and probably could have reacted there. This one, this reacted here. So this and this could be like the same thing, you know, the same thing. So understanding the entry, the execution of the entry is way better than just taking a trade here, taking a trade there. If you do not have a setup for entries, execution, I'm sorry, but you're not gonna make it, cause look, execution. People don't talk about this, but execution helps you with your psychology, and your psychology helps you with your consistency, and your consistency makes you profitable. Okay, so if you have a bad execution, we just saw this bad trade. Okay, he won money, but on the long term, on the long run, what do you think is gonna happen to this trader? What you think is gonna happen? He's gonna be so stressed that if he lose one trade, he wants to go back in the trade to revenge trade. Why? Because he's already having drawdown here, drawdown here, drawdown here, drawdown here, and he's telling himself, every time I take a trade, the trade goes against me. Of course it's gonna go against you. Look at that. Look at that entry. Okay, you exit here, but you could have this trade could have gone wrong, and you would have been stopped out. So look for keys to place your entries. Okay, for example here, let me remove this, give me a second. For example here, look at this. Let me take this arrow. Look at this. We have a resistance here. As soon as we form a resistance here, I'm taking a sell, bro. I'm sorry, but I'm taking a sell. If you're not doing something about this here, you look, you see, it did something about this and it went up. If you're not doing something about this area here and you're just mimicking this area, bro, I'm pushing down. I'm sorry, but I'm pushing down. I don't care, because this is a good entry. This right here is a good entry. Okay, would I sell here? No, I wouldn't sell there. Would I sell here? No. Bro, would I sell here? No. Would I sell here? No, because I don't have any confirmation that this is a good entry. But here, it is a confirmation, because it's rejecting this area, and this candle is rejecting this area, which is the same as this area. So if we are rejecting the same thing, there's a high chance that we will do the same thing. Okay? High chance that we're going to be doing the same thing. And look what happened. We came up, we rejected here again, and we pushed down. We came up, we rejected here, and we pushed down. Okay, this candle here pushed all the way up. So we are not looking for sells anymore at this point, because this candle here said, hey, I don't care about this. She better look for something else. Yep. So look at this. We had this resistance. We made this support. This candle here came down to this support and closed above this resistance. Why wouldn't I take a buy here? Why wouldn't I take a buy here? Would I take a buy here? No, I wouldn't take a buy there. But here, why wouldn't I take it? Explain to me. If I'm seeing rejection at this line here, I'm seeing rejection. I'm seeing rejection here, here, here. And this is not even touching it. This is not even touching it. Okay, this kind of drive through. But how many rejection we already had on this line? 1, 2. We push through. 3, 4. And this rejection here showed us that it respected this line, this area here. So why wouldn't I take a buy? If this candle here respected this area, why wouldn't I take a sell? here is no trade. I wouldn't do nothing here. Okay, because I don't have nothing to base
Hello?
myself on. Hello?
Yes. Right there.
Mm,
What?
hi, Tavia. How you doing? You good?
I'm okay. Yes, I have a question.
Okay, I'm listening.
Yo, why wouldn't I take? Because I just joined and I'm looking at like about 5 minutes.
Oh,
Oh God, you
okay.
took off all the arrows and you clear everything.
Yes, because you
So
just
you keep
joined.
saying, why wouldn't I take by here? Does that mean?
No, let me explain. Let me explain. Let me just do a recap. We were talking about good entries and bad entries. Okay. So,
Yeah, man, I got that right.
so
I
this here,
got
this here. Are you familiar with MT5 or MT4? Are you familiar with it?
it. That is what I use for my personal account. So
Okay,
yes.
okay. So you know what this means, right? This is trader A, and this is trader B.
If I know what means,
These arrows. Do you know what it means?
not seeing the arrows. Oh yeah, entry and exit. Yeah.
Okay. So this entry here was trader A. This. Let me change the color of the arrows so
Because
that.
I was at that early, and I'm like, why would you enter that trade?
No, because I'm talking about execution, about good setups and bad
No,
setup.
I know I understand. Now I understand. Before I was like, I was really wondering why would you take that trade and be in it for so long too.
Okay, so that's the whole point of it. So this. Oh, let me change the color of that one. So it's green. So this is trader A and this is trader B. Okay, so trader A took this trade here and
And I only okay, I seen it better.
it came all the way down here, like a $700 drawdown. While this trader B waited for a good setup of support on off the 15 minute. I used the 15 minute for this one. Let's see. Off the fifth.
That's
Yeah, I used the 50 minute off for this one. A rejection here, uh, and a push, a small push to the upside. So this trader took a trade
okay.
here. It,
What made you use the 15 minute? I thought you said you don't trade 15 minute.
I do not trade the 15 minute, but we are talking about execution. We're not talking about strategies. We're talking about
Okay.
execution. So this candle already pushed up all the way up. This guy got FOMO, enter a buy, and as soon as he enter a buy, look at this. Not even one pip in profit. J- Straight down, $700. This guy entered this trade and he got out with $200 profit in less than 30 minutes. $200 profit, less than 30 minutes. Buy. This guy goes and feed the dog, walk the dog, go and spend time with his family. While this guy loses 3 hours and a half in this trade, stressing, sweating, because he went heavier. He went heavier because he has $1,000 to lose. This guy only had $200 to lose. He made $200. This guy had $1,000 to lose. I only made $200. So at the end of the day, they made the same amount of money, and this guy exit first. He risked more. This guy risked more, but at the end of the day, he did the same thing that this guy did. The same amount. I can pull up the amount right now so that I can pull it up here. Okay, look. So trader B is these two trades, and trader A is this one. Trader A made 250, and trader B did 220. Look how many drawdown this guy had. Look how long he took in the trade. Look how long. 3 hours and 40 minutes. So I was explaining, if you do not have a solid execution, this is what's gonna happen to you always. And one day you won't be able to manage it. You will get desperate. Your psychology is gonna damage, and you're not gonna be able to say, "Hey, look, this is a good trade. I'm gonna go in." You're gonna say, "As soon as I go in, it's gonna go against me." So that's when your psychology get messed up, and that's why I said that execution brings good psychology, and good psychology brings consistency, and consistency, everybody knows, brings profitable traders. So I was explaining that's why I was explaining over here about, let's go back to the 30 minute. That's why I was explaining over here that I won't take sells if we get this breakout here, because I have nothing to measure my sales operation from. I'm not saying I'm not taking it, okay? I'm not, because we're talking about execution, right? If there's nothing that I can compare it to, I'm not taking this sell. Why would I take these cells up here? Because this is something that I can compare to. Look at this. This is something I can compare to. So
Okay, so you're talking about the pattern.
I'm talking about the execution, because we
But
know
you're executing based on the pattern, the familiar pattern to the left. That's what I'm saying.
exactly. So that's so
So if you look to the far left
if
of those
if
two, the same thing happened over there as well. So it's really just noticing the pattern and then you execute based on that.
exactly. But I have to say, what I'm saying on this webinar is not particularly my trading style. Okay, it's just something that I can compare how good entries and bad entry works. You understand? It's not directly that I won't take this trade, because depending on the condition on the market, on the hour that the market is in, I potentially would take this sell, but it depends on the conditions. Okay, for example, let's say this candle here closed like this, right? That candle closed like this, and the next candle just respected that and came down. I'm taking sell off here because it's showing me a pattern based off this. Based off this, it's showing me that we have been at this level here and we rejected. And we're being at this level again and we are rejecting. So my sell has to be close to this line here. If my sell isn't close to this line, that's one thing that I need. I that's one thing that helped me become a better trader. Once I identify zones that I'm interested of taking sells, my sells or my buys has to be close to the zones.
And where do you put your stop loss in that case?
It all depends. Uh, it all depends. Let me just try to find one.
So based on the
Let
candle
me try.
pattern that is here. So you're using an example here. I'm saying in this
Yeah, let me
case,
just
if you
try.
took the
Let me try to find a market pattern so that we can base it off of that pattern. Okay, look, we can put it on this one. Okay, so this candle didn't close bearish, but I think on the 15th it did. 5:30. Give me 1 second. 5:30, 5:30. Okay, around here. So my entry needs to. Excuse me. I didn't catch you. Hello. You with me, Tavia? Okay. Take.
Yes, I'm with you. I just couldn't find the button to unmute, and I didn't realize I wasn't muted and I was speaking to somebody in my background. Sorry.
Okay, don't worry. So look, this is my cell pattern, but I wanted like a buy pattern. Let me see if. No, this can't be a buy pattern. I wanted something for real, something that I would take in the real market. Trying Okay, for example, this. Okay, this. Have you? Let me make sure that we're on the same page. Do you think I'll take this trade in this candle here, Tavia? You met me for about a week and a half now.
Yes, because of the rejection, it's rejecting below. It's 30-minute time frame this?
Yes, 30 minutes.
Yes, so it's similar to the pattern on your left. So if you're marking off that as your zone and it's rejecting to the downside, once it comes back up and flip, you would enter right there.
Okay, so
So then I guess in this case, your stop loss would be at the break of the current candle low.
yes, the break of the current candle. But let me see if we can find it on the 15. Can we find it on the 15? What time is this? I don't know how to use very well MT5 because now I trade futures, so I try 16 530. 16 530 right here. Okay, so this is a trade here. This is a trade. This is the trade right here. Yeah, and I will enter like around this area here. It needs to be close to my zone. If it's not close to my zone, then it's not for me. The trade is not for me.
What you answer me a while ago?
Excuse me? Could you were talking to me, Tavia?
No.
Oh, okay. So, like I was saying, this trade here, I think it's this one.
Yeah, I was
Yeah.
just about to say that it's that one. That is it.
Yeah, give me
With the
a sec.
bigger candle moving up.
Yeah, I think this is the one. Okay. Sorry, it's just that, you know how things goes. I have a small brain. I'm not too smart on this. Okay. So, my entry has to be at least at the break of this high. Why? Because it's close to my zone. Look at my zone here. Why would I take an entry up here for buys? Why? This entry here doesn't make sense to me because my zone is down here and my entry up here. So why would I take a buy there and not here? Same for this. Why would I take a sell? Let's see, support sell here. Oh, this is a good sell. This is a good sell. Yep, this is a good sell right here at the break of this sell of this, and not take it down here. Why would I take it at the break of this? This is a great sell, awesome sell. I took this sell on Friday. This was the sell. Something like this on Friday. I took it. I'm probably gonna look it up so that you can see the similarity. So this trade here, why would I take it here on this line? Because it's close to my zone. This trade here, why would I take it here? Because it's close to my zone. So if it's not close to my zone, I'm not taking it. So people must understand execution must come with logic. Like if you don't have gasoline, right? If you run in a car and you're low on gasoline, would you wait for the third or the fourth or the fifth gas station to throw on gasoline in your car, or as soon as you see one, you're gonna go in? So this area here is my area of gasoline, right? This is my gas station. This line. Why would I take? Why would I start looking for a gas station up here if I already passed this gas station? Either I come back down, okay. Either I come back down to this line and I try to find something here. As you see, it's been respecting this line, bouncing off this line, then it pushed down. Okay, but why would I take something away from this line? Like, it doesn't make sense to me. It needs to be close to the line that I'm interested in. So for example, if we have a sell here, a buy here, a green candle here, a red candle here, why would I take sells? Why would I take sells after this candle close and not at this candle when it's clearly showing me that it's respecting my line of interest? So execution, we just talked about it, we explained it here. Let's just push it here. We just explained it here. It was a perfect example for execution. Why would I take it a buy up here and not take it down here? Look where I took this buy, close to the line of interest of mine. This line, I think I moved it, or if I didn't move it, I think I had an invisible line here, I think. But why would I take an entry up here and not down here? Okay, this guy went up, he got his money after 3 hours, but this guy didn't even last an hour in the trade. Look, 25 minutes in the first trade. No, in the first trade, 10 minutes. 10-minute trade, I made $150. 10 minutes and 25 more minutes to complete the candle. He completed $220. So if you can catch these type of trades and not these type of trades, I promise you, you're gonna start getting payouts. You're gonna start growing your account. And one more thing, these trades, of course, when you already find your edge, your execution, your execution, your perfect execution plan. Once you find it, you're not going in 1% or 2%. You have to go in that thing at least 3% or 5%. 3 or 5%, because this is showing you if you lose, you're gonna lose sometimes and you're gonna win sometimes, okay? Because trading is unpredictable. But if you go heavy on perfect execution, wow, I feel like the word perfect is too strong. Let me find another word. On higher probability execution, and you just risk a 1%, what would happen when you start risking 2% and you lose? Or your next trade becomes a loser. You'll be back in zero. So at least take advantage of these setups with perfect execution. Let's say you got 2 good trades, right? 2 good trades. So that's 6%. You're up 6%. 2 good trades. And you start seeing bad trades. You take a 1% trade. Let's say you got 3 losses at 1%. But they weren't this type of trade, okay? You said, okay, I want to take, let's say, it was in a choppy market like this, okay? Choppy market, you don't know where it was gonna go. You said you're gonna take a buy, and you ended up losing 1%, another 1%, and another 1%. You still have 3% to play with, not to play with, in profit to close the day green. So, if you're not going, I repeat, listen, look at this. Look at this one more time. Look. This guy, let me just
When you're finished with this session, can you send me the YouTube link to it, please?
yes,
Because I'm
yes,
gonna
yes.
have to log off now. I have something to do.
Okay, no problem, no problem. I'm gonna be sending it out to you. No problem.
Hello,
Yes, yes, I'll be sending it out. Don't worry.
Alex?
Eh, Hello, can you hear me?
Alex? If you're talking, I'm not hearing you.
You sure?
I see you typing, but I'm not hearing you.
Check it. Check your speaker.
Yeah, I hear you now. I hear you now. I hear you now.
Oh, okay, okay.
As you said, yes, sure, it came in so loud.
Gotcha, gotcha. So,
Yeah, but I was asking if you could send me the YouTube link because I have to log off because I
okay.
have to go and do something.
No, no problem. I'll send it to you. Don't worry. No worries.
But as usual, very helpful because in that, yeah, I learned a lot from that question I asked just now.
No problem. You're gonna also see more. At least if you see it from the beginning, you're gonna understand like better because from the big we were based off
Right, that's why I send me the YouTube link because I want to watch it again.
Okay, don't worry. I'll send it out to you. Okay.
All right,
Th-
thank you. Bye.
okay. Bye bye. So, having this trade here, let me go for the stop loss and pips. No, we're gonna do it here. We're gonna do it here with this same setup. Look. Okay, we said that this guy stayed in the trade with his full lot size for 10 minutes and 25 minutes overall. Okay, so his maximum drawdown was 87 pips. Sorry, not 87, 8 pips. Because, you know, this was a 78 pips. 78 pips drawdown on trader 8. This one here. This trader here. 78 pips. And this trader only had 8 pips. So why would you lose your time and your energy on a trade just to make $250 when this guy made $250? Okay, he made less. Let's say he made $200. You made $50 more. Is the risk worth it? The stress and the bro, I don't even know what to say. Seriously, I don't even know what to say. Of course, sometimes you're gonna take trades. It's gonna go against you, but at least you have more higher chance probability waiting for price to come to you to take the trade and execute on your trade, not just taking random trades. So what I can say is look for your strategy, find good ways to figure out your personality, and if you want to follow me on my strategy and this and understand how I do my risk management and everything, you can ask questions, bro. You can ask questions, and I'm always here to help. Always here to help. Okay, so moving forward. Moving forward off execution. Effect on psychology. I don't even know how to talk about this because this is so has so much information that I don't want to mislead someone saying something that's not really what they need to hear. So I'll go off with this: greed and fear. Look at my previous video. We talked about greed and we talked about fear. So you can get a whole 1 hour, whole 2 hours understanding greed and fear. So I'll just still do a small, a small recap. Greed wanting more money, and fear is scared of losing money. So, okay. So, FOMO comes with this and this together. Okay? FOMO comes with fear of missing out and the greed of stepping in. Okay? So, make sure that you don't have a loose entry. When you have a tight entry, you control your risk better. Same as we did here. Look, guys, we came up here. This is a new. This is something that I wasn't studying for this. I took a random date. I look up this, and of course, it was going against me. I said, no, look, this is not a good opportunity for me to take this buy. This sell. I closed it and I retook it so I could explain the entry, so that I can explain this to you guys. Because I'm not interested in you guys seeing me operate. I operate every day. I make money every day. I lose money every day. But I want you guys to understand, if you don't have a good entry, you're going to be in drawdown. You're going to be in drawdown. So, this is the important part. Pick an entry model you can repeat. You need something you can always repeat, not just, hey, look, I took this trade, I'm risking 1,000, but if I lose this 1,000, I can't take it again. So don't take it, cause you can lose that $1,000. If you can't lose 1,000, why would you take a trade to lose 1,000? Look at this guy. The reason I always come back to this guy is because I need you guys to see him. Look at him. Look at him up here with all this drawdown. And look at this guy with no drawdown. So if you're not willing to be this guy and risk heavy to win just 250, be this guy then. Risk 250 to make 250. Isn't this guy much smarter? But what's the difference? Why wouldn't... Okay, so look. Would this entry here work with the stop loss I placed here? Because the stop loss I placed here was like around this area here. No. Because the stop loss would have been here. And he would have been stopped out. This guy here would have been stopped out. So that's why that guy have to look for an entry. Very smart. And that was the smart entry. And this was even smarter, even a smarter entry. I didn't take it because I didn't want to be greedy. You know, I didn't want to put like more pressure on the trader B. But look at that. Look at that. Stop loss, good. Didn't hit. Got money. Stop loss, good. Didn't hit and got money. This guy had his stop loss around here. Of course you're gonna make money. But also you can lose $1,000. And for you to win back $1,000, you need to be in all this drawdown again for 4 trades. Because you're gonna be losing 1,000 in one trade. So I hope this was very understandable. On the execution part.
Yeah, it was. Yeah, it was.
Have this ever happened to you before, Calvin?
Oh, okay. This I don't take trades for that long though. So I can't, I'm usually cautious on this type of trades.
You're usually cautious.
Yeah.
Okay, that's good. That's a good start. That's a good start. But
Yeah.
you at least you understand the concept behind it, right? At least you can see like
Yeah. Yeah.
sometimes if you don't have the money, you have to be like more, not even if you have the money, bro, because this trade, if you keep taking these type of trades, overextended, way up here, just because a big candle you saw and you think it's gonna keep pushing up, just because this pushed up, it came down, this pushed up, it came down, this is gonna push up. No, it didn't push up, it pushed down. So don't think that the market is not looking for a way to catch you. Okay, it's always looking for a way to catch you. You must find a way to catch him before he catch you. So either this entry was good or this entry was good. But this entry with all this drawdown, oh my god, this is just terrible. This is terrible. If this guy, if trader A is trading a prop firm, he's paying me every time I take a payout, because he's buying at least 50 accounts to pass one combine, and once he passed the combine, he burns it. Because look at this. Once you in a funded account and you see $500 drawdown, you're gonna close. You're closing. And once you close, you know what happened? This happens. Look, this happens. This happens. Once you close. So either you take good entries or you're willing to take big drawdowns. Oh, guys, give me 1 second. Just 1 second. Okay. I think my little man is gonna wake up. So let's just. Yeah, I gotta pick him up. Give me a second. Give me 1 second. Let me just put something on here on the TV for him so he can. Okay, so let me check this. Okay, hi Julia, how you doing? You came in late. Julia.
Hey, I'm here. It's really late here though. The webinar finished late on ETE.
Oh, okay, I got you. I got you. I was just explaining some execution formula and nothing. That was just the end of it. I was explaining good entries, bad entries at the start of the video. Then we start talking about psychology and the execution. So
I don't know why your volume is so low.
my mic.
Yeah.
Just one
Turn
second.
you up. That's all right. Oh, I turned you up. It's okay.
Okay.
With the entry,
Okay.
is it better to wait for the because I got caught one of mine this week. I didn't wait for the first 15 minutes of the 30 candle, and it actually flipped back up again. Is it better to wait for the first 15 minutes for confirmation and then enter?
It all depends on what time you took the trade, because remember, each time has its own volume. So if
Right.
if you're taking it on London Open, you know that it's gonna happen quite a bit, because it usually goes, when it goes one way, it just creates a low and push up, or it creates a
Yeah.
high and push down. But sometimes it would just run without even making a wick.
Yeah, well, that's true.
So
I'm happy for the wig, but yeah, I got burnt, and I thought, oh, maybe I really need to wait for that 15 minute to close before I enter because,
that's a condition you
yeah,
can add in. That's a condition you can
yeah.
add in.
Well, yeah, you're right though, but yeah, it can take off and just take off as well.
Remember, you can't win. You can't win all the trades. You need to pay the market something.
I know,
So
I
maybe,
know.
maybe
It
that loss,
just unfortunate.
did it end up going your way?
No,
It
no,
didn't.
it didn't.
Oh, okay,
No,
so it you just you got activated, then it just flipped against you.
yeah,
Okay, that usually
I
happens.
think,
That usually happens because you on you need to, on this occasion you need to make sure about news. You need to make sure the time you took the trade, and make sure at those particular times that those volumes happened. Try to be more
mm,
conservative, you know. Like
yeah,
if you took that trade, let's say London Open. So now, from now on, all London Open, you wait for the 15 minute, for the first 15 minute.
yeah,
Then you execute on your bias.
yeah,
So if you took it on New York Open, okay, I'll wait for the 15 minute on the New York Open, then I'll execute on my bias.
yeah. I think the safer option is the 15 minute, but remember when we were trying to make it a different trade to Nick's trade because you were saying, yep, we do it on the flip rather than waiting for that confirmation. But I'm finding now, you get burnt more often than not if you're not waiting for that confirmation. So
No, but remember, you can't be like, it's not just at the flip. Remember that we need some area of rejection. Listen, you need some area of rejections.
yeah, yeah,
So if price is down here and my area of rejection is up here, I need to wait for price to come up here for it, for
mm,
then I start looking for my confirmation to get in on the break of the low or on the flip.
yeah,
So if price just like this one, okay, like this one. Let's say this is my area of interest, right? And this area here, I'm waiting to be activated for sells, and it's just
yeah,
run through. I'm not taking sells anymore because it's just running through. Look, this has no top wick, this
yeah,
has no bottom wick. So my bias for sells at this area is it's it's a loss. But if we come back down at my interest and we respect it, I'm taking buys.
yeah,
Why? Because this is was just a breakout and it's coming down to retest. Breakout and retest. That's it.
yeah, yeah.
So if so here, look,
I wouldn't enter on that one because there's no wick.
yeah, I understand, but this
Yeah,
I'm just trying to, explain so that it can be like more understandable. Like for
mm,
this one, we just run up. But this one we respected it
yeah,
on the opposite side. So why would I look for
mm,
sales here? It makes no sense. You understand?
yeah,
For me to take sales here, I need this same thing but at the downside. For example,
yeah,
I needed this to respect this line. These two candles to respect this line. I don't care about the wicks. The wicks I don't care, but I needed a candle to respect it. If the candle would have respected it, this would have been a sell opportunity.
mm.
So remember, you always have.
I'm always looking as a wick as. A point of rejection. So it's like you've activated if the next candle activated the sellers and then it came back up and then flipped and and then you're ready for your buys.
Okay, that's a good way to look at it.
Hmm.
That's a good way to look at it because that's the same thing
Well,
I
that's what I'm looking for, at least some kind of yeah. And that way it's kind of respected the previous level, but then it's come back up.
Yeah, but I think still that even though you lost a trade,
Hmm.
I can say that you executed on the mark. You executed your plan. Your plan just
Yeah.
didn't work this time. So
Yeah.
it's not that you have a
Well, it
bad
made me
system.
think that I needed a bit more confirmation. So,
Yeah, that's
yeah.
that's it. That's it.
Yeah.
So probably next time I can bet that you gonna be more profitable than what you were yesterday. Because every day you're learning.
Okay.
You surprise me. You surprise me every day.
Me.
Yep, every
Well,
day
as I
you surprise.
said, because I've got Cam taking these moves now, and he loves it. And I said to him, just because now he's over trading too. And I said to him, look, just be careful because it's not going to work every time. It's got a probably about an 80% win rate. I said, you have to do it on the 30 minute. If you do it on the 15 minute, it's never going to work.
You know that.
We know that.
If you know, you know.
Well,
So
I've seen you test it, so I know. Um, yeah, but he's actually green this week, so he's happy. So he's doing well now.
has he been trading with Nick still, or he's just been doing the A plus setup?
He's been doing the A plus setup.
Oh, that's nice.
Hmm.
That's nice. I hope Nick
I
doesn't.
think he is taking next trades, but he's just sizing down and not. And I said to him, no, you've got to really look at every single trade and go, if if uh, if it wasn't like a Zoom session or something, would you still take the trade?
Exactly.
Would you? Yeah. Would you be in that? And if the answer is no,
Don't take it.
because he just on his webinar, Nick was saying we got to stop putting stops below like the previous candle and put it back below in the previous range of that, back into the range kind of thing because the way the volatility of the candles moving up and down and stuff. But that means even bigger stop losses, like that's even a bigger risk.
Bigger
So,
risk, yeah.
yeah. And I'm thinking, well, even if I would think about taking, normally if they've got huge stop losses, I won't take the trade or I'll wait for it to come. Like he took a few trades last week and I waited for it to come back up again. Like went down and then I wanted to come back up again and then I got in.
That's the same thing that
Because
happened here.
it's too risky if it doesn't work. So,
That's the same thing that happened here. Same thing. If you look at this, let's say this was the first trade, right? Trader A
hmm
took the trade. He had all this drawdown. Trader B had zero drawdown. Uh, eight pips drawdown. 8 pips.
yeah.
And what he took out, he took out these two trades. He closed partials at 140 and full at 78. Total 220. And this guy here, with all the drawdown was how much? 787 drawdown.
hmm
Why would you have this drawdown here for $700 and
Yeah.
only close 250? You understand what I mean?
Mm.
So
Yeah.
that's that.
Yeah, because that's the biggest thing with this way of trading, and I've seen the same question or the same thing come up again and again and again. They're like, "Yep, they're doing well until they take a loss, and then if they take a loss, it's wiped out all their profit for the week, and it's because they've taken a risk with the biggest stop loss." Do you know what I mean?
Yeah.
But
Yes.
I'm the same because when I do my risk, I normally do 25 pips base hits and 50 pips drawdown.
Yeah. No.
So if I take a loss, it takes me two trades to make up a win.
But it's better than the whole week.
Oh, yeah.
And I can guarantee you, if you are trading the way that you trade, like you having consecutive wins. You having win streaks.
Yes and no. I did. Oh, my TradeOvate account. haven't been doing well on my TradeOvate account, and I don't know if it's because I'm not. I've got to reassess what I'm doing, whether I've got to like manage the trade better and look for like break even a bit earlier.
Okay.
Because my problem is because I've got TradeOvate going, I've got Project X going, I've got um probably two TradeOvate accounts going, or whatever. I'm trying to manage like three different trades at the one time,
And it's
and I'm not.
stressful. It's
I'm
stressful.
losing the management part of it. Yeah,
Yeah, it's
losing the
stressful.
management.
Sometimes you go to close a trade in profit. When you go to the other trade, it's in negative, or it's
Yeah, yeah.
yeah, yeah.
It's.
I got you. I got
I
you.
mean, I've got the brackets. Like I've got the
It
automatic
doesn't
brackets
work
that
hundred
open up.
percent. It doesn't work 100%.
No, no. And I've burnt Lucid accounts a few times now. So I think I've got to concentrate on that this week, try and manage the trade a bit better.
Or trade less account. Trade one account. Trade one prop firm today, the other one tomorrow, and just
Yeah. It just depends on like sometimes I'd only get to do one trade a day because of work or whatever. It just depends.
okay, I got you. I
But
got you.
yes, yeah.
Because you can't be losing account just because you're bad management. You understand? If you don't put
Yeah.
in the work, you're gonna stack up, and
Yeah,
then
because I was sitting there thinking, why am I burning these TradeOvate accounts? And I'm thinking, what am I doing different here than what I was doing on Project X? And I'm thinking, on Project X, um, I would move to break even as soon as I was about 10 pips in profit. I would just move it to break even, and then if it goes, it goes, and if it doesn't, it doesn't.
it is what it is. If
Mm,
it goes, it goes. If it doesn't, it doesn't. At least you had your.
yeah,
At least you had the price and the balance and everything. You can just calculate it out and make sure that
yeah,
you're losing that amount. That's also something that helped you. But probably
yeah.
with 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 Tradeovate, it's a bit more complex. But all you have to do is adapt. You know, if you start adapting,
Oh, well, I had a lot of issues. It wasn't copy trading properly on my trade sinker, and I had lag and yeah, this and slippage and all this stuff. So, but well, it's just a beast you got to learn how to manage, I think.
yeah, yeah, you're gonna get it. You're gonna get it. Don't worry.
I will. I will. So I only reset. I've only got three accounts going on Lucid at the moment. I thought, you know what? I'm just going to leave the other two. I won't reset those two. I need to get my management and everything right with this
before yeah, exactly. I think that was
before
a great
multiplying.
that's a great decision. Great decision.
Yeah.
That's a great decision because if you're seeing that you're losing account, why would you invest? You have to first fix
Yeah.
yourself, then you invest.
Mm.
Because if you don't, then you're just gonna be the side that loses money. You're not gonna be the side that wins.
Yeah. I bought one account on TradeC because Lucid are now doing TradeC, which is very similar
To
to
Project
Project X.
X. Okay.
You can get a demo account with TradeC and just play with it, but it's still in its beta stages, and like there's no noise when the order gets filled. That's a bit scary. And yeah, I burnt that account. So I'm just gonna leave it till they get it better before I reset it.
Why? Why? You're afraid of you're afraid of losing of the or the failed sound.
No, no, I need the autofill sound because, as I said, I'm normally in more than one account.
Okay, I got you. I got you. You want to
Yeah,
hear the order failed, so you know. Oh, I'm filled. Where am I filled? Let me check. Here. Okay.
yeah,
Yeah.
yeah.
Yeah. Yeah.
Well, often too, like I'll see reject 3 or 4 rejection wicks on a 30-minute, right?
Yeah.
And I'll go, right, if it can break all of those lows, it'll fly. So I'll set a sell stop at the break of all of those lows, like a good 5 or 10 pip, no, good 5 pip, I would say, at the bottom of break of the lows. Not, don't want to be nipple wicked in, but a good break. But that could take ages. It could take all night before that breaks, you know.
Got you. Just moving up and down, dancing around the area.
Yeah.
Yeah, yeah.
And then all of a sudden, order filled. Oh shit. Oh, where was that? Okay, yep.
Yeah, yeah. It usually happens. That usually happens. That usually happens. Uh, you wanna go to the floor? Okay. Here, play around with the floor. Okay. So, nothing. Uh, okay. So let me just show you what I was working on this last couple of days
Yep.
on the journal.
Sure. Mhm.
Let me show you what I was working on the journal. So, okay. So I have to. Give me 1 second. Let me grab this little man again. He wants to be on my lap today. Okay. So the journal. Where's the journal? Where's the journal? Uh, journal. Uh, where's my journal? Okay, journal code. Okay. No, give me 1 second. Okay, so demo.py. Let's check this one. Give me 1 second. Look. This, you remember this journal, right?
Mhm.
How you see it? Does it have a better look at it? Does it look better?
Yeah. Mhm.
Okay. So I've integrated something in this journal. Like if you're gonna take a trade, right, on the 30-minute, and you're doing
Yeah.
a bearish, the bias is bullish, trend continuation, A plus
Mhm.
setup, right? And you come here and you place it like it was a take profit trade, okay? You come down,
Mhm.
you save it. Once you come back like the next day and you try to take the same trade, it's gonna say 100%. It's a one
Okay.
win, one win. So now when you see that, you say, okay, I can go a little bit higher. But
Yep.
if you go on the 1 hour, you're gonna see it says no data yet. But
Yeah.
once you add it, and you put in like let's say a loss. Let's say it was a loss, right? Stop loss. Let's say it was a loss. Once you're going to do it again, let's say then on the hour, let's say the next day, it's gonna say no, stop, risk less, because this trade is not
Uh-huh.
too good. So
Mhm.
with this, just with this, making, you're gonna be fixing your errors on the way. You're gonna be risking less on losing trades and risking more on winning trades. So
Yeah.
once you have this, you're gonna have this also. Like you can add here the daily analyze, right? This is something
Mhm.
that I think that's gonna be good for people. Uh, I okay, so I need to see. Okay, mm, I needed something here. I need some candles. I need some candles. Let me go get some candles. Just so that. Let me just get these candles here so that I can show you. For example, this is the start of the day, right? The start of the day. We go here.
Yeah.
We go here. We just take this screenshot. This is the start of the day. This is the 1 hour. Stop. You paste it here. Paste image. So that's the 1 hour. We write the note.
Mhm.
1 hour is bullish. waiting for setup. Let's say the daily is bearish, but can't see setup. And in case you didn't catch a trade that day, it would just say, let's see, let me put let me put one, let me put 1 3. Okay, let's put this one here. So let's paste this image. So in case you didn't catch a trade here in this day, on this day, it's gonna say 0 trades. So now you can sit down and analyze this chart and see what you could have done better. And not even that, like
Right.
you can add
Mm.
all your charts here, like 30-minute. You copy it, take the chart, you paste it. You take the 1 hour. You do the same thing. The daily, you do the same thing. You just keep doing it until you write all your notes. You write all your notes
Mm-hmm.
of that day of analysis. If you didn't take a trade, then you can come back and see. Okay, let me see what I could have done here to make myself profitable on this day that I didn't have no trading days, or see what you can avoid for the next trading session. You understand? So I
Yeah.
believe this what I created here was very interesting, and that's what I wanted to show you
Mhm.
last week when I was calling you. This was I wanted to
Yeah.
show you. I
Yeah.
wanted to ask you if this was something good, if this was something that would
It
help.
is good because it show give you a bit of direction and stuff. And when you go back to analyze your trade, you're gonna be looking at all the bias and seeing if you made a good decision or whether you need to change something.
Okay. So I guess then, uh, and this is also something that we. This is something that what? It's not. Sorry. Okay, I have to open it from my trading journaling. I have to open it from here. If I don't open it from here, it won't show.
Do you take screenshots so quickly? It takes a lot longer on a Mac to take a screenshot.
You sure? I take it on the Mac. It's fast. It's because I have a program that takes it for me. Okay, so
What? Take the screenshot for you?
yeah, I click the button, then I take the screenshot wherever I want it. So either I want to save the screenshot, I just click here, and it's saved anywhere
Hmm.
I want, or
But you're on a PC, aren't you? You're not on a
y-
Mac.
yeah, but I think this program works also on the Mac, but I don't know. I have to
What's
check
it?
it out.
What's it called?
This program is called uh, look at here. This one, Flame Shot. Flame Shot. I'll send it to you later. Don't worry.
Okay.
So this is another part of the trading journal. I kind of stole the idea from TTE, but I hope
Yeah.
he doesn't wants to demand me. Look how it looks. Like, okay, we're gonna check on breakouts. Let's see how breakout works. We open the image and we start analyzing 4 hour daily, 15-minute looking like this, strong breakout, 15-minute looking like this, weak breakout. We can keep analyzing like overextended breakout. Like you can look up. I don't have all my strategy inside yet because I have to add it, but you can just look and it's gonna say best stop loss. This is gonna be the best stop loss, but it's something that you keep adding on. You can add on like uh, another thing, and another thing, and another thing, and you can just write your notes here about what you think about whatever, blah blah blah, and you save it, and then whenever you come back to it, it will have all your information there. For example, for the breakout, weak versus strong, breakout with fresh support. So it will just keep showing you more data once you keep filling it up with data. And I think this is a good thing too. For example, for this breakout, for the breakout, the current breakout high, I need to add like the example of that trade, and just in case some like you forget how a setup is looked because you have so long that you didn't test it out, or even if you're testing out a new strategy, you can just add it here and say pending strategy, and add it here,
Okay.
and you can say, okay, this happened Thursday, this happened Friday, so let's see if it happens on Monday. If it happens on Monday,
Mm-hmm.
you can go in with a small lot size and you can keep track of that pending strategy or pending setup
Mm-hmm.
you're trying to implement and to add to your revenue,
Mm-hmm.
add to your repertoire. So it all depends on how you want to use this journal. I think this journal is very powerful. I think from what we started it, I don't know if you remember when we started the journal, it was like so shady, it was small, it was like,
It looked like a Windows 3.1 journal.
yeah, but now if you look at it, look at this. It has our logo, Rinse and Repeat. It has our links to the social media. It's kind of based off strong status, you know. And here we can see
Okay.
it on the journal like what we did. So okay, so let me. I wanted to share with you this also. Look, the
Uh-huh.
trade I took. The trade I took on Friday. Okay, this boy is just not letting me. Okay, so before the trade I took, what time frame was it? It was on the 1 hour. So before I took the trade, it looked like this, right? It looked like this
Mm-hmm.
before I took it. Had my buy stop at the break of the high of the current candle. The current candle was pushing down, and I
Mm-hmm.
was thinking that it could push up to keep pushing up. That was my plan.
Yeah.
So after that, I got activated, but I got a little bit of drawdown. But
Mm-hmm.
we never stayed below. Like we never closed below. To
Mm-hmm.
we just we just stayed around this area. Then we pushed up. My entry was a
Right.
little bit too early. Looking at the 15 minute, you can see I had a little bit of drawdown here.
Yeah.
This drawdown here was my drawdown.
Yeah.
So once we finished like stopping out the sellers or activating the sellers, we pushed up.
Yeah.
So this was the
Yeah.
pushed up. It was amazing trade, and it was nice. Same as this trade
Yeah.
here. Same as this trade, but this trade was zero drawdown. Let me see. Yeah, this trade was zero drawdown. You see this candle, no wick at the bottom. I think it was
Yeah.
a small drawdown. I think it was a small drawdown. Let me check. Uh, let's check. There's a candle. There's a red candle. No, no drawdown. I got activated here.
Mm.
Then here we pushed up.
Yeah.
So no, no. So at least this program is gonna help you save your screenshot, help you analyze your chart. You can see here that it was a pain buster, trend
Mm-hmm.
continuation. It was in Sydney, Tokyo, and it was on the 30 minute. So now
Mm-hmm.
any trade I take on Sydney, Tokyo on the 30 minute is gonna say 100% win rate until I gather more data. I'm gonna start with this data fresh to not,
Yeah.
continue with all my old data. So I'm going to start fresh, starting from now,
Yeah.
26th of February. I'm going to start from this journal from now
Mm-hmm.
to see how is my trading, to set it up for my trading, from my own experience, from my zero experience, like from my zero experience journal to see how I can build up this journal and hope
Mm-hmm.
everything goes well. After a month or so, and I see the journal is working properly, there's no lag, there's no error, then I'll have like, if you're interested, of course, I'll have a copy for you and for the other members if they're interested, of course.
Okay. Yeah, because I'm finding it hard now with Trade of Eight um to journal properly
Okay, okay.
because it's not as nice to, you know.
And do you think this one, this journal is gonna help you?
Well, I think so because at the moment I'm just taking screenshots and just saving them in a folder, but it's not, you know, and then I'm uploading to TradeZella, but I have to then remember at the end of the week where which goes where, and it's, you know,
Got you.
I
Got
should be doing it daily, but I just haven't had the time.
got you. Understand. Uh, so nothing then. We're here. You know, the webinar today was quite how you call it? Small. We just
Hmm.
did like, we did like 1 hour and 10 minutes. Then me and you start talking. So
Yeah,
this is gonna be on YouTube. Hope you don't. You're not scared of having your voice on YouTube.
that's fine.
Okay then. So Julia, so I really appreciate